What's up, investors? It's the Russian dude. In today's very short video, let me give you a very brief update about the most recent CPI inflation report, because it is showing that inflation started to reaccelerate even a little bit faster than previously than anyone else anticipated. Long story short, the most recent US CPI inflation reading came to us at 2.9%, while the previous number was only quote-unquote 2.7%. And then the US CPI core came to us at 3.2%. All these numbers are obviously above the target inflation of the Federal Reserve of 2%, and as you can see, it even increased from the previous already high inflation of 2.7%, it increased by additional 0.2%. Just keep this in mind that the Fed pivot only started recently, and we already see the inflation reaccelerating. The rate cut only totaled to 1%, so while the inflation reaccelerating so quickly, it is a very concerning sign to Federal Reserve. If I would be Jerome Powell, I would most certainly be very aware about whether we should continue cutting the rates or not, maybe to keep them, or best case scenario, maybe to start increasing them once again, at least by 1.025% increase. Because guess what? There is a lag effect on the market. Whenever they cut the rates, the inflation is supposed to follow just several months later, not immediately. Which basically means that if the inflation goes up simultaneously with the rate cuts, it only means that, well, in the future, whenever the lag effect picks up the speed, the inflation might reaccelerate even faster than originally thought. Another thing is that most likely this increase in the inflation is some kind of a self-fulfilling prophecy. Because people expected that the rates will be cut eventually in the last quarter of 2024, and indeed it did happen. Because of this, people expected also that the inflation will be on the rise, and because of this, it led to accelerated spending, because people knew that right now their money are worth just a little bit more than they would have been worth several months from that moment. And because of this, because of the expectations that the inflation will increase, people started spending more money, started increasing the economic activity, which once again became a self-fulfilling prophecy, which led to the increase in the inflation. This is yet another example of the incredible work of the market, which always thinks ahead, which is always 2 steps ahead of whatever politicians and other economists they are trying to do with it. The market, it is the sentiment of hundreds of thousands, if not millions of people. It is just one common brain of the stock market participants, and they always work in advance. They always make their decisions before these decisions become official, as presented by, once again, either Federal Reserve or the US government. To be honest, once again, it is pretty concerning. Right now, the probability that the interest rates will remain the same during the next meeting are more than 90%, which basically means they will try to stop the inflation from the rising. But in my personal, it is my personal expectation that we will still see maybe a minor increase during the next inflation report reading. Let's see if I'm correct or not. This is just an assumption, just a prediction. I might be wrong. I'm just a human after all. I do not have the resources of tens of thousands of analysts under my belt. So guys, if you want to stick around and see whether I'm correct or not, please subscribe to my channel, like this video. Thanks so much for watching. See you tomorrow.